Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths in corporate filings. And today we've got a report that has got some interesting financial tidbits that nobody told you about. Get ready to dive into PS International Group Limited's latest report. We're slicing through the numbers to see what is really going on behind the scenes. Before we begin, if you love getting these straight up, no fluff analyses, make sure you are subscribed and hit that notification bell. And don't forget, our Discord community is buzzing with more insights. So join us there too, the link is in the description below. Alright, let's get straight to it. PS International Group Limited has dropped its report for the month of November 2025, and the main event here is their unaudited financial results for the first half of 2025. It is like a snapshot of the first 6 months of the year, showing how the company has been doing financially. Now, when we talk about financial results, the most important part is always the numbers. This report gives us a look at their financial statements. They are comparing the first 6 months of 2025 with the same period in 2024. This is crucial because it shows us if they are growing, shrinking, or staying steady. Looking at the top line or revenue, we see how much money the company brought in from its main business activities. In this filing, they are reporting their results up to the 30th of June 2025. A key number to watch is how their revenue has changed compared to the previous year. If revenue is up, it generally means they are selling more or their prices are higher, which is a good sign. If it is down, we want to understand why. Was it fewer sales, lower prices, or perhaps a shift in their market demand? Beyond just revenue, what really matters to investors is profit. That is the money left over after all expenses are paid. The filing shows us their profit for the first 6 months of 2025. A growing profit is a strong indicator of a healthy business. If profit is declining, it means their costs might be rising faster than their income. Or sales are simply not strong enough to cover expenses. We need to see if they managed to increase their profit or if it took a hit. Another element to consider is total comprehensive income. This broadens the picture beyond just profits from regular operations. It includes things like unrealized gains or losses on certain investments that haven't been sold yet. So even if the main profit looks okay, a significantly negative or positive total comprehensive income can tell us about other financial movements impacting the company's overall worth. And then there is earnings per S-share or EPs. This is a very popular metric because it simplifies the company's profitability on a per share basis. If EPS is growing, it usually means the company is becoming more profitable for each share of stock that exists. A declining APs can signal that profits are shrinking relative to the number of shares outstanding. It is a quick way to gauge how the profitability is translating to individual shareholders during this period. Now, let's put on our Warren Buffett hat and look at the bigger picture. What these numbers are telling us is how PS International Group Limited navigated the challenging economic currents of the first half of 2025. Are they gaining market share, innovating effectively, or facing headwinds that their competitors might be handling better? We need to remember that these are unaudited results, meaning they haven't gone through the thorough external checks that audited statements do. So while they give us a good, timely insight, there is always a possibility for adjustments down the line. However, for interim reports, they are typically quite reliable indicators of performance. What this filing primarily highlights is the company's performance in revenue generation and its ability to convert that revenue into profit. We're looking for trends. For example, if revenue is up but profit is down, it suggests increased costs or price pressures. Conversely, if revenue is flat but profit is up, it might indicate strong cost management or higher profit margins. The real story is in the comparison. How did this 6-month period stack up against the previous one? Did they maintain their momentum or show concerning signs of slowing down? Looking beyond the immediate numbers, we need to consider the context of PS International Group Limited's industry. What are the general economic conditions affecting companies like this? Are there specific challenges or opportunities that PS International Group Limited might be facing that outsiders might not see immediately? For instance, if the entire industry is experiencing a downturn, then a slight dip in performance for PS International Group Limited might not be as alarming as it would be if the industry is booming. We are essentially trying to understand if the company is outperforming, underperforming, or keeping pace with its peers based on these financial results. Now, let's talk about leadership. The report is signed by Chun-Lin Tong, who holds the important titles of Chief Executive Officer and Director. This tells us who is ultimately responsible for the company's strategic direction and operational performance. When a filing like this comes out, especially with financial results, the market often looks to the leadership signatures as a mark of accountability. It's the formal stamp of approval from the top brass on the disclosures being made. To sum it up, PS International Group Limited has provided a peek into its financial performance for the first half of 2025. While this report focuses mainly on the financial statements, it's our job at Corporate Decoder to find the narrative within these figures. Are they a company on the rise, firmly holding its ground, or facing significant challenges? Based on this filing, the crucial takeaway will be observing the growth or decline in revenue and profit, and understanding what drives those changes. Looking at PS International Group Limited's report, it seems like the company is very much focused on presenting its financial health for the first 6 months of 2025. The main documents are the financial statements, which are the core of understanding what is happening financially. It's a bit like reading a company's report card for that period. The numbers themselves will tell a story about their sales and how much profit they've managed to hold on to after covering all their costs. We're particularly interested in how these numbers compare to the same period last year, as that's where we can spot genuine trends and understand if the company is moving in the right direction. A strong increase in revenue with a corresponding increase in profit would be a very positive sign suggesting effective business operations and market demand. Conversely, if revenue growth is weak or declining, or if profit margins are shrinking, it could point towards challenges in sales, operations, or pricing power. What does this all boil down to? PS International Group Limited is giving us a clear financial update. The key for us is to look past the raw numbers and understand what they mean for the business. Are they growing their top line? Are they managing their expenses well? And ultimately, are they creating value for their shareholders? This report gives us the data points to start answering those questions. Alright, that is our breakdown of PS International Group Limited's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.